So my hyperliquid thesis is that the arb against, right, where you're arbing against is going to move from sexes to hyperliquid. So the base case of where you're going to arb against is you're going to arb against hyperliquid, right? That's going to be your home base for where the capital sits. Why? Because if I have capital that I'm moving around and I'm moving around tens, hundreds of millions in size, going to a sex or moving money to a sex or having money sit on a sex and I need to move it elsewhere takes too long, right? You're talking about 2, 3, 4, 5 minutes. Like we're playing in the games of seconds, milliseconds, right? Because to go from hyperliquid to an Arbitrum perp dex or a new L1 that has a new perp dex or mega ETH or anything like that is instantaneous through the HyperEVM, right? And so the thesis is that the arb loop needs to be as tight as possible to make markets as efficient as possible, right? And I think things just happen to move towards efficiency over time. And so if that is the case and that thesis continues to hold true, that like where the money sit is where the money is going to be most efficient, then the capital is going to sit on the HyperEVM because it needs to be able to access Hypercore, right? The main Hyperliquid protocol, and then be able to be transferred and bridged to all these other protocols and all these other chains as quickly as possible to maintain market efficiency, right? Because if there's money to be made and there's money on the floor, people are going to pick it up.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features the founder of the crypto creative agency Scribe. We have a conversation for you with someone who is having working relationships with the top protocols in the space. This is a marketing agency. We call it a crypto creative agency, but this is an episode where we cover a lot. We talk about Pump with the recent TGE. We talk about crypto M&A. We talk about just the maturity of the industry, actually like the need for more professional services in the industry. He had some really original thoughts to share on like where the space is headed, what's coming next, even some risk in terms of what might be the next blow up, something like an FTX, but hopefully less severe this time.
Yeah, we talked about his sort of unique vision and thesis for Hyperliquid and why he's so bullish on it. And then to your point about, we covered Pump, Jupiter, and Radium and sort of the interplay between all those protocols. And I guess like unbeknownst to myself, there's a bit of like a Solana wars going on between some of these protocols that are rushing to vertically integrate and basically eat each other's lunch that honestly I was sort of unaware of. So we get into that.
One point that Ishan made, and it comes at the very end of the podcast, and keep in mind, Ishan is a Solana bull. He definitely holds like a large position in Sol. But yeah, he had a really interesting take about maybe some growing pains that Solana is about to experience. So
yeah, something else we discussed kind of near the end of the podcast, just we all weighed in on our thoughts on where we're at in the cycle, how much room is left to run. And I think we all kind of had varyingly different thoughts on that too. So yeah, stay tuned for that.
Just a quick reminder, you can subscribe to the Edge podcast by going to the-edge.xyz. That's where you can get real-time notifications for new podcasts, plus any new posts through the Edge podcast. You can also go to our link tree. It's edge_pod. And then that way you can either listen to the podcast on Apple or Spotify or watch us on YouTube. And then one last reminder, just thanks to our sponsors for making all this content possible. We take a lot of time to try to select the types of partners that represent protocols that we would actually put money into on-chain. So hopefully you can show them some love by just going to the show notes. You can find their link and find a description of all the cool things that they're building there. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose Redstone oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need Redstone's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to Redstone for supporting us here at the Edge Podcast and Edge Newsletter. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over $1 billion in AUM across USDC and BTC products. And now with SYRUPUSDC by Maple, anyone can earn institutional-grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge Podcast and Edge Newsletter. FALCON Finance, the team behind the fastest-growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. All right, let's introduce Ishan, the co-founder of Scribe. Ishan, welcome to the Edge Podcast. How are you doing?
Yeah, doing great, guys. Glad to be here. Long-time listener, first-time caller.
There is a prediction you made, I think, in fall 2022 about the downfall of FTX. And I think that sort of sets the stage for really everything that followed after with Scribe and so forth.
I think the best place to start is like post-Luna. So generally, when you have, Luna plus UST in May of 22, you're talking about like a $60 billion market cap that just goes poof in like 3 days, right? 5 days, whatever. To give you guys like a frame, that's Lehman size, right? Like Lehman was 60 billion, right? And crypto is not nearly as large as like traditional equities. So you have 60 billion that goes poof like that quickly. I was just looking for collateral damage, right? So I just, after that point, I generally held the thesis that there was going to be some pretty major collateral. So I was already just like kind of on the lookout for like, what is this collateral going to be, in order to then, right, like the best trades are the ones where you're, seeing where the puck is going. So I'm just trying to see where the puck is going, right? And then I think it's just like a series of, context clues, you can call them, of things that were happening that just felt off, right? So you start to see things like, one, they're spending a shit ton of money, right? Like left and right. Miami Heat naming arena rights, donating to campaigns, and, on and so forth, right? And so you're seeing like, a bunch of product failures, right? They tried to do stocks. Think about it. They tried to do stocks back in 2022, right? They did the NFT thing. They tried to do the NFT marketplace. And then you started to see like operational things, right? Like, okay, Sam Harrison leaves, right? Who's now an architect. You had Trabuco leave, right? It's like, man, if these guys are making money hand over fist and these guys are trading gods, like, why are these guys leaving, right? Especially because you start to think about like vesting schedules and you're like, dude, Brett Harrison, like, he hasn't vested at all yet. Why $32 billion company? Like, why are you not vesting, right? Like, why are you leaving right before your cliff hits? Like, that's crazy, right? And then you start to look at things like, when we first started working together, we did a lot of work with Gains Network. And so we were pretty early and deep in the derivative space. And so we're looking at like derivative market share. And we're like, man, like on-chain is growing like crazy. And like sexes are losing. And so it's like, you start to put these pieces together. You're like, man, like they're losing top talent. They're spending a shit ton of money and losing and like on crazy stuff, right? And so it started to come together. It's like, dude, there's no, like, these numbers just don't make sense, right? Like, you can't be spending this kind of money, losing market share, and and people would just be like, oh, they're just making so much money in Alameda. And then you start to hear stories about like, well, actually, are they? Like, they're kind of not really doing super well at Alameda, and they've had some really bad losses, and the kimchi premium's gone, and stuff like that. And so I just generally built this thesis that like, I think FTX was the collateral damage, right? Another one was 3 Arrows going down, and Voyager, and some of these like early on-chain borrow lend or off-chain, sex borrow lends. And so then you start to just build this general thesis that, man, like something just fishy here. So I wrote this entire thread. I was, on my Threadboy arc at the time, back in October of 22. So about a month before everything happened, I wrote this entire thread and put in all this data and stuff. And then, at the beginning, I mean, I got shit on for it, like absolutely killed for it. I remember I had a buddy in Friends with Benefits, the DAO, who sent me screenshots of a conversation about the thread when this guy was just crushing me, like, this guy's an idiot, he doesn't know what he's talking about, on and on. And then, boom, like a month later, I kind of got my comeuppance a little bit. And with that thread, I kind of put out a pretty public short. And so I kind of called it out. I said, hey, I'm publicly going short. And then a month later, it turned out to be a half decent trade.
So Ishan, before you were coming on, I wanted to review that tweet. And for anyone that's curious, it is his pinned tweet. We'll throw this in the show notes, but it is really crazy and prescient. Not only did you take all of your money off the platform, you also put on the short. And yeah, I mean, incredible hindsight, because I would say in this industry, it's very hard sometimes to go against the grain, even though, in crypto, we're all kind of trained that way anyway. But I see this groupthink just come in all the time. And it does take some, you definitely expose yourself to go against things at times and stand up. So yeah, kudos to you. I want to ask you though, kind of using that insight, maybe there's not things, hopefully, like an FTX black swan out there, but are you seeing things out there that are giving you kind of early warning signs or worries or keeping you up at night in crypto, right now?
Yeah. I think going back to the point you made about going against the grain, it's like that's where the best trades are made, right? I always think about the GCR Trump trade. That was like an iconic trade. And so in order to make really, really great trades, you have to be one, against the grain, and then two, you have to be right. And it's I think about the four quadrants are are you in the grain, are you out of the grain, and then are you right or are you wrong? And you want to be in that top right quadrant where it's I'm against the grain and I'm right, and that's where the crazy trades are made. On your second point about what are the other things that I'm seeing that might that give me a little bit of pause. I think the obvious elephant in the room is the Treasury stuff, right? Crypto has always even look at Luna, look at all the really, really bad events that have happened in crypto outside of Mt. Gox. It's typically leverage driven, right? There's just something about this industry that attracts people that are, for lack of a better term, greedy, and people that the type of person that gets into crypto is the person that's oh man, everyone over here in equities is trying to make 10%, but I can make 10x, right? And that's just a piece of the market psychology. And I guess the thing that leads to is a demand for leverage or a higher risk appetite. And so then I just see people issuing equity against, or issuing equity in their company in order to, get Bitcoin, get ETH. And I think if you can get yield on it, right, that makes a lot of sense. I think that makes a little more sense. But to me, it just looks like a big leveraged casino that now TradFi is trying to do. And when you have this crazy leverage, typically what happens is something black swan-y happens, and then everything has to unwind. And if you don't unwind, then you get liquidated. And, I think right now everything is at such a premium to NAV. I don't think that's going to continue. And I think when people have to start unwinding and there's not demand for these bonds, or there's not demand for issuing this equity, to buy this equity, or to get these loans so that they can buy this, the crypto, I think there's going to be, you're going to start seeing a discount to NAV, and then that's when things get pretty ugly. But I think that's kind of a relatively obvious one. Just in general, people tend to be really excited about leverage. And what is it? I think Munger, right? It's what are the three things that kills great traders? Liquor, leverage, and ladies. Munger's Munger for a reason, right?
Yeah. To the Treasury point, something that DeFi Dad and myself have been kind of educating ourselves on too is just the issuance of these shares too. So with a lot of these new Treasury codes, they launch, but the public doesn't see the full share dilution right away because it's obscured in a filing. People aren't going to the Edgar site and looking at S1s and 8Ks, right? So there's information there that people aren't seeing. And what that means is, so for example, there's stuff out there with trading it with 5 million shares that are soon going to have 50 million shares in short order. And people are buying this stuff up. And we saw this with SBET. We saw a 70 to 75% correction when all those shares kind of came online. So I said a tweet to DeFi Dad the other day, just some guy wanting to ape into this, a pretty notable, I guess big Twitter KOL, but clearly speeding right past this issue that we're talking about right now. So there's that. And then I think Alex Thorne from Galaxy put out something interesting about when a lot of the trouble starts to hit. It is pushed out pretty far just by the nature of how these things are structured, but it's 2 to 4 years from now. So I think like what happens in a bear market is really scary with these. That's one of my worries. And then just people buying these things too early and getting a little bit too exuberant before they know what they're buying and what the total share, outstanding is going to look like. But yeah, I know I'm very excited and optimistic about this though, but I'm also, worried a bit.
Yeah, definitely. There's just a lot of nuance there. And I think TradFi needs to get their taste of like, what makes crypto, which is insane volatility. And I think once they start to get that, I think you're going to see some people start to rethink how they think about issuance of this equity and how they think about buying. And I think like the only thing I would add, again, I'm not like the most educated guy on this stuff that I will caveat, but I think it makes a lot of sense when it's coming from a company like MicroStrategy had real revenue, right? Like, of course, it's nothing like today, it's nothing compared to what it was. But in order to scale it to the point that it is today, it needed real revenue backing it. And I don't see how this stuff works with companies that have no revenue, right? Like Leshner just bought like he just like took control of the board of like some liquor company and that's like dying. And it's like, well, if there's like no real revenue there, like people are going to buy these shares just on the idea that you're going to buy ETH with it. Like, and I don't know, it just doesn't make a whole ton of sense. Yeah.
So prior to this, we were going back and forth a little bit about Hyperliquid and the HyperEVM, and you are a HyperEVM bull. And there's actually a lot of HyperEVM bears out there on the timeline saying it's too slow. What's the point of it? Why does Hypercore need it? So I'm just kind of curious to get your full unfiltered takes on HyperEVM.
Yeah, I'm a big HL bull. I think it's surprising to me that more people didn't find it sooner. Especially as like, as burgers, like, it just makes a lot of sense that like, like how did I find Hyperliquid? Well, like I wanted to trade perps. I couldn't trade perps anywhere. And so then I was looking for a place and like, I don't know if I'm legally allowed to say this, but I don't know. I got good lawyers. I don't really care. Like I tried to find like sex accounts or, work with friends who have sexes who are in regions that it made sense. And it was so complicated and it was so scary. And it's like, if I have friends in India, well, like India has really strict crypto taxes, right? You try to pull out, you're going to get hit with 30%. So I'm like, how do I do this? Like, how do I trade perps? I have so many good trade ideas. And then I found Hyperliquid and I was like, oh, this is awesome, right? And so I think I'm surprised that more people didn't get into it earlier, pre-token. But okay, I'm going to give you guys like my Hyperliquid thesis. Like I would like to think this isn't like a basic, like, oh, it's an awesome perp DEX. Like, yeah, of course, great product, right? So my Hyperliquid thesis is around capital flows, right? So historically, where has the most active capital in crypto sat, right? It sits on exchanges, right? Why? Because the most capital typically, there's passive capital that sits in staking, and that's by far and away the most, but you're talking about active moving capital on a daily basis, right? Where does that capital sit? Typically sits in sexes. Why does it sit there? Because of the ARB opportunities, right? You're trying to ARB on-chain versus off-chain, right? So you're trying to look at Binance, you're trying to look at Coinbase, and you're trying to look at the ARB opportunities there, right? And you're trying to ARB, okay, well, Binance is at this price, this perp DEX is on this L2 is at a wrong price, or, this LP is at an incorrect price, so I'm going to ARB against that, right? And that's where a majority of the active capital sits, right? So my Hyperliquid thesis is that the ARB against, right, where you're ARBing against is going to move from sexes to Hyperliquid. So the base case of where you're going to ARB against is you're going to ARB against Hyperliquid, right? That's going to be your home base for where the capital sits. Why? Because if I have capital that I'm moving around and I'm moving around tens, hundreds of millions in size, going to a sex or moving money to a sex or having money sit on a sex and I need to move it elsewhere takes too long, right? You're talking about 2, 3, 4, 5 minutes. Like we're playing in the games of seconds, milliseconds, right? The effort of going to a sex is too much. And so it's not necessarily going to happen on sexes if the better price discovery and the better place to ARB against is going to happen on Hyperliquid, because to go from Hyperliquid to an Arbitrum perp DEX or a new L1 that has a new perp DEX or Mega ETH or anything like that is instantaneous to the HyperEVM, right? And so the thesis is that the ARB loop needs to be as tight as possible to make markets as efficient as possible, right? And I think things just happen to move towards efficiency over time. And so if that is the case and that thesis continues to hold true, that like the best where the money sit is where the money is going to be most efficient. Then the capital is going to sit on the HyperEVM because it needs to be able to access Hypercore, right? The main Hyperliquid protocol, and then be able to be transferred and bridged to all these other protocols and all these other chains as quickly as possible to maintain market efficiency, right? Because if there's money to be made and there's money on the floor, people are going to pick it up. So if you're following me there, where the ARB loop is going to be on Hyperliquid and it's going to move away from sexes, and you're not going to be ARBing against sexes, you're going to be maybe going to sexes to ARB, then where does all that capital sit? It sits in the HyperEVM, right? And so it has to sit in the HyperEVM. So all of the active but idle capital is going to sit on the HyperEVM because they need to be there to ARB throughout the entirety of the space as quickly and as efficiently as possible. And so if that is the case, then the HyperEVM is going to be where all of this money sits. And so you're going to see things like, the Felixes and the Hypers and things like that. But even if there's like an Aave instance on the HyperEVM, that's where a majority of the capital is going to sit because it's going to sit there, then it's going to get ARBed, and then, someone's going to see an ARB opportunity. They're going to, start to make the trade. They're going to, ARB something against the Hyperliquid, or they're going to hold their money on Hypercore. And the tightness of that loop is the most valuable thing because of the access to all these different places, all these different exchanges, right? Decentralized exchanges, but they're exchanges, right? And so then you start to realize, oh shit, well, like if all of the money is going to sit there, then that's where the most opportunity is going to be, right? Because you have idle capital, and, if you have a ton of idle capital, then people are going to come borrow because the borrow rates are going to be low. A bunch of people are going to borrow because they can easily just borrow and trade on Hypercore. Then if people are able to borrow, then the borrow rates get high, and then more capital comes in, and you create that really great flywheel that Aave has historically owned. And I guess a big part of my thesis is that that capital is going to historically, which sits on ETH mainnet and then goes to sexes, is going to sit on HyperEVM, go to Hypercore, and then go to all the L2s and the decentralized exchanges and the LPs and the other perp dexes and things like that. And so I think most of the capital in crypto, and I think like over a long enough time horizon in the world, could, I'm not going to say it's like definitively like, oh yeah, it's 100% going to live there, but it could, and I think it makes a lot of sense for that capital to sit in the HyperEVM.
The one part of the thesis that I poke holes in, but then I see like opportunity elsewhere is there's a certain amount of capital that like lives on Ethereum mainnet. And I think like Ethereum's like best feature right now is what trust, uptime, the credibility of like how long it's been running, the fact that like institutions that put money on chain can defend themselves. It's defensible to put that money there. And this is what you're calling out to maybe, I don't know how many years out, but then where I see like more immediate sort of opportunity to eat up market share is like with the likes of Solana or any other sort of like L1 that was wanting to be like the decentralized NASDAQ or like, the fastest, high throughput chain out there. I guess like, yeah, like how do you think about the competition for Hyperliquid based on the thesis you just put out? What are you viewing as competition for Hyperliquid? I mean, sounds like it's competing with everything, but like, I guess I'm differentiating. There's very different customers there that you're catering to.
I think the biggest thing is the Solana piece, right? How do you go from ETH to Solana as effective as possible, as efficiently as possible? You're going to bridge. Again, it has the same latency problem, right? When you're trying to bridge from EVM to SVM. And so with Unit, which I think Unit is I think Unit is going to go down as like one of the most interesting protocols that we're going to look back at in 5 years and be like, holy shit, they figured that out. Is again, the ARB loop is as tight as possible because you have Unit, so you can have spot, you can have FALCON spot, you can have Solana spot, you can have native SVM assets. And that's where I think, like, I tend to agree with you, right? Like I'm more or less an ETH maxi as well. And I think I agree with the premise that that's where a lot of capital is going to sit. But when I think about active capital, right, capital that's like ready to move at any turn, I think institutions are going to hold their capital on ETH mainnet, right? But I think when you think about like price of movement, which I think it's not necessarily an issue now, but we've seen it be an issue in the past, like, where you have like pennies versus dollars in terms of movement. I think like people are just going to go where there's less friction. And I think moving to things like the SVM, moving to things like Move networks, I think that HyperUnit is going to be the best conduit to get there. And so you're going to have like tighter ARB loops between HyperUnit and HyperCore. And that is going to lead to more capital sitting in the HyperEVM. So like overall, like I tend to agree, but I think the hard part about most of the money just sitting in ETH and going from there is one, cost, and two, latency to go to non-EVM chains.
So I feel like what HyperCore and HyperEVM is doing is almost like a further representation of the dream that Binance really wanted with Binance the exchange and then Binance Smart Chain, right? Hyperliquid's taken it a step further. And why this is important is we're seeing really creative things come out of, this core writer read precompile stuff, which is kind of confusing names. But to me, it's just, it just creates like composable real-time synchronicity between core and EVM. And the creative stuff that I'm seeing is like, so Kinetic, the LST that actually just launched today, they're going to be able to do really cool things like pool capital and introduce new perps onto the platform. So they've actually found a way to do decentralized perp listing via the LST provider Kinetic through HIP3. And why that's cool is there's massive fee sharing that goes into these people that present these new token tickers to trade. And they have basically a fiduciary duty, like a responsibility to do right by these listings because they can get slashed if they don't. But the upside, I wish I had some of these numbers to pull off the top of my head, but like doing some napkin math about how much you can generate in fees off one of these HIP3 listings, if you hit like a good one, is kind of insane. So I bring all that up just to kind of further, hammer home the point of how novel just this interaction they've created between HyperCore and HyperEVM that doesn't exist anywhere else right now. So Coinbase is close at doing this with Base and having this kind of interoperability between the exchange platform and, creating the whole DeFi mullet thing. But I can't wait to see what happens. But you mentioned Solana in there, and this is something else we were talking about offline. I mean, talk to me a bit about, you've been kind of developing this thesis about verticalization wars. And honestly, it's been very unbeknownst to me because I'm not as in the weeds on Solana maybe as I should be, but like you kind of posit that there's wars going on between Jupiter, Pump, Radium. Can you kind of fill me in on that? You kind of gave me a few tidbits in Telegram, but yeah, curious your thoughts there.
Yeah, happy to. So I think, okay, so there's like, we can put the L1 stuff to the side, but I think what's happening on Solana right now is like probably the most fascinating business case study that's out there in crypto right now that no one's talking about, which is there is an all-out war going on between Pump Fund, Radium, and the Jupiter ecosystems, right? So to kind of backtrack a little bit, it's like Pump Fund, it launches, it goes incredibly viral, right? And Pump Fund, for anyone that's not aware, is like, you launch a meme coin and then people can buy it. And then when it hits a certain bonding curve, historically, that bonding and the actual listing of the asset or the creation of the liquidity pool was done through Radium, right? So Radium helps bond, Radium runs it, and now it's available off of the Pump Fund platform for anyone to purchase, right? I don't remember exactly when this happened. Maybe it's like, I don't know, in crypto, I can't tell my difference between days and weeks and months and like 6 months and years. But within the past, this year, Pump Fund decided that, hey, we're leaking a ton of value to the Radium team, right? They're being able to profit a ton off of what we're doing. We own the distribution and the user base. And so what we're going to do is we're going to cut out Radium as the DEX where the bonding occurs, and we're going to build our own Radium competitor, and we're going to have the bonding happen on PumpSwap, right? And so then they launch PumpSwap, okay? And then fast forward to, I don't know, I guess basically last week, you have Radium who partners with Bonk, who realizes that, hey, maybe we can't just allow a front end to use us. So they created a really deep relationship with Bonk Fund, right? Where I think there's tokens exchange, there's equity exchange, and they're like, hey, we're tied at the hip, we're getting married, and you guys are going to be our front end now. And what happened was BonkFund basically took all volume, right? And I think like they went from, PumpFund went from like 80, 90% market share to like 30% market share. And all the tokens that are launching right now are happening on BonkFund, right? And then the quiet thing that's happening in the background is you have Jupiter, right? And Jupiter is one also launching a token launchpad, but then they also have the DEX infrastructure. They're also an aggregator, so they own the user relationship, and most swaps happen through Jupiter. So each of these guys are theoretically playing a really important piece. At one point, Pump owned the token launchpad. Radium owned the DEX. You have Jupiter, who's owning the swapping, right? And getting to get the maximized value extraction of the swapping. And what each of these individual companies realize is we have to verticalize, right? And why are we leaking value to these other places? We can just own all of this ourselves, right? And so now you see, Jupiter launched Meteora, and they wanted to, and they spun off Meteora, and they want to do perps and things like that. And they also want to do the bonding itself. And then they were like, we want to do the launchpad too. And then Radium was like, we need to do the token launchpad. So like, let's partner with Bonk, right? And then, they're also likely working on some things, other things that Jupiter is doing, right? And then you have Pump Fund that's like, we cut out Radium, so now we want to do the launch pad. We want to do the DEX itself with PumpSwap. And you know what? We're going to further own the user relationship. So we're going to get into streaming, right? And we're going to launch a streaming service, and all streams are going to be tied to a token. And that token's going to bond, and it's going to be bonded on PumpSwap, and then it's going to be tradable. And so you're seeing this war of everybody trying to verticalize the entirety of the stack, from token launchpad to bonding in the DEX to perps. All these guys are going to get into perps. I think Pump Fund is going to get into perps too. And then, so then what you're seeing is like, how does this shake out over the next 3 months, 6 months, a year? Because everybody is fighting for a majority of the market share on just Solana, right? So basically, each of these are vying to be the canonical trading protocol on Solana. Now, there's a lot of interesting pieces to this. For example, Pump is going after the streaming market, and they're using that to further their distribution, right? Okay, well, is that going to continue to happen? You see Kick has burned hundreds of millions of dollars to try to get into the streaming space. I think I read they just hit 25% market share versus Twitch. Like, you're trying to compete with Amazon, right? It's a really tough game. As Pump, is that a game you want to get into? That's a really, really interesting case study there, right? If you're Radium, you're like, okay, we got cut out of Pump Fund, and then we partnered with Bonk, and we hit lightning in a bottle, and we took all that market share back plus some, right? That's awesome. Now, is that sustainable? And then you have Jupiter that's like, maybe we should do a launchpad too. And, we have we own the user relationship when it comes to swapping, because that is by far and away the number one DEX aggregator, right? And that's where all the swapping happens. They charge a ton of fees. They have great, limit orders and DCAs and a lot of great functionality in that. And then you see them going through a lot of acquisitions, right? And all three of them are going through a ton of acquisitions, right? Radium is, I'm sure, talking about some stuff. Pump Fund just acquired KOL Scan. You have Jupiter that acquired Moonshot, and they're trying to further own the user relationship and get higher up in the stack. And so you're seeing like everybody's trying to own the top to the bottom of the stack. And it's just a really fascinating discussion to understand, where's this shit going to end, right? Because I think there's a ton of financial implications for each of us, the audience, about where do I make the bet? Do I make the bet on Pump because I think they're going to own streaming? Do I make the bet on Radium as the core infrastructure? Or do I make the bet on Jupiter because they own, they own the user relationship, a lot of the user relationships. So if they just launched a token launchpad, memeified it, maybe they can take a ton of Pump's volume too. Or is Pump just like, we're going to launch streaming, no one's going to be in this game with us, and we're going to go consumer and real Web 2 viral, and we're going to own all that. It's a really fascinating case study about like, what do you do as a business when you're a $1 billion protocol and you see an opportunity to become a $10 billion protocol, and how do you go about it? And I think each of these companies are going to make really, really important decisions in terms of acquisitions, in terms of team structure, in terms of what problems to tackle specifically, that are going to have a massive, massive impact on the Solana landscape over the next 3 months, 6 months, a year, 2 years, 5 years.
Ishan, do you see a distinction between that competition between these different protocols that are trying to like verticalize everything on Solana from like what happens on Ethereum? Like I actually feel like what I've seen on Ethereum is at times there's been so much focus on like the composability of DeFi that I've almost felt like some of the protocols that got created, some of the applications, the DeFi products were like really narrow, but they were like reliant on like all of the composability. We're going to focus on this. We're going to be the best at doing whatever it is. And I feel like what you're describing is the complete opposite approach of trying to like own everything. And I haven't thought about this as much, but with what you called out, like I'm thinking like, yeah, like what's going to play out here? Do we think like we're going to see then just a few players win on Solana, and then does Solana DeFi then end up revolving around just a few protocols? Which, by the way, is I'm not saying that's even a good thing, because I'm already frustrated with the lack of DeFi opportunities there. Like I go to Solana and I'm like, I'm going to use like one of like 5 or 6 different products. Like that's it. And then I go to Ethereum and I'm overwhelmed by the amount of choice. I feel like I'm constantly trying new things there on Ethereum.
I think it's fascinating because I think it's also a function of like the cultural phenomenon of each chain. And I think chain culture is like real. Like that is 100% a thing. That is a thing from the teams that build them, right? Like think about the philosophical, or I guess philosophical is probably the best way to frame it, like the philosophical engineering behind Ethereum versus the engineering behind Solana. And I think like Ethereum is a little more kumbaya, like let's all be friends, you know. I think a lot of the early DeFi guys are like, I think they're genuinely friends with each other, right? Think of like, you know, the Curve guys and Leshner and Stani, and, you know, they're all like a little bit competitive, but they all kind of stayed in their lanes and were, because they were early pioneers, right? And I think Solana is almost like a Silicon Valley-ish, where, you know, it's like, oh, hey, like we've dominated this market, like what's next, right? Let's go dominate the next market. Let's go take the next market. And so I think it's a function of the culture of each chains. And I think, you know, also like the other kind of elephant in the room when it comes to this is on Ethereum, you have a ton of different core infrastructure, right? You have like the Flashbots guys, and you have, you know, Nethermind, and you have like all these different core infrastructure providers, right? You have 3, 4, 5 different core like Geth and Reth and you know, like core protocols, right? Whereas on Solana, who is like the main infrastructure provider is Jito, and it's Jito's one. They've been king made and it's over, right? Whereas on ETH, that's not a thing, right? So I think that's a function of just like the culture of each chain, that, you know, ETH was way earlier. And so when everybody came to DeFi, it was all like, hey, we're all building this together. Like we're all trying to figure out if this is viable or not. Whereas Solana, it's like, hey, all this stuff's been proven out. This is all real. We're just going to verticalize, right? And we're going to try to own as much market share and own this as much as possible and own the user relationship and all of that. I think another really interesting one is like Phantom, right? Phantom is another interesting piece to this, because Phantom was like, actually, like, you know, Drift, like Zeta and all the other perp markets, we're just going to go to Hyperliquid. And Solana Foundation couldn't have been happy about that, right? It's like, dude, you're not going to use the core protocols here. You're going to go and do HyperEVM integration in order to get perps directly onto your platform. And why? Because they're at the absolute top of the user relationship, right? They're the ones that are like top, you know, whatever in the app store. And so they own the user relationship. They're not thinking about, you know, what is best for the chain. They're thinking about how do we best maximize our, you know, LTV per user, right? And they're like, oh, well, if we do Hyperliquid, they're going to get the best execution. They're going to stay here. We can take a higher fee because they're not going to get crazy spreads on Drift or something like that, and, you know, open a trade and be down or something like that. So I think it's a function of just the culture of each chain. But I think these are I think these are going to be HBR business case studies in, like, you know, the next 5 or 10 years about, like, you know, what happened between Pump, you know, and Jupiter.
Yeah, I mean, there's a culture of being mercenary. Like, just call it what it is, and at some point it can backfire on you. Like, I think clearly, like, the strategy on Solana has worked out very well. I mean, the ecosystem came back from like the brink of death after FTX, and you know, there's a lot of like great teams building there. Like I'm still like, I use Solana DeFi and very happy to continue to use it. But I think what you're calling out, it's actually potentially working against the whole ecosystem now. And with a major player like Phantom, you know, as you pointed out, like leaning now on Hyperliquid perps. I mean, I think Hyperliquid is an enormous threat now to Solana. It's crystal clear that like that mission to create the decentralized NASDAQ, I mean, that is the rallying cry of Hyperliquid, except instead of a foundation where we don't even know how much like SOL they own, we've got Hyperliquid, where like everything is pretty much crystal clear and they've got this incredible grassroots community. They do have like a bit of that kumbaya culture. I think like Hyperliquid is like maybe somewhere in between. It's not as kumbaya as Ethereum. I do see, more competition there, but like they're also early and there's been a wealth effect there. So the Hyperliquid community is, you see a lot of big holders like reinvesting what they made from the airdrop and what they've made since, probably buying at the market lows. And yeah, it's really exciting. Oh, one more question though on Pump. So the Pump TGE just happened. Like however degenerate the NFT bull run was in 2021, things got so much more dystopian with meme coins. And at some point, just like with NFTs, the demand ran out. And like, I don't understand, like, what do we do? Just keep creating like meme coins for meme coins? I mean, like, who wants to trade something where like 0.0000001% of people are even making money? Like, what else is there to launch? Like, I guess, like, are they just gonna like have a bunch of streamers, launching an infinite amount of like of meme coins? It feels like the demand is so close to running out there. Like, even though, again, I'm sure the token will pump to like 10 billion. It's currently sitting at like 5 or 6 billion. I'm not like going to short that thing. I'm not getting in the way of that train, but it's not something that I see as like a long-term play. It looks like something that we will look back at through like some business case study and say, wow, like what a run up they had, but like what sort of long-term users are they drawing upon? Like institutional investors aren't going to be like, yeah, we need to get into like, shitcoin 1,999,000. So
no, I think total permissionless token creation is like a 0 to 1 thing. Like that's a real phenomenon. That is a industry changing. I don't want to say like world changing. That's a little like hyperbolic, but like this is like a big unlock. Like, oh shit, I can tokenize anything, and that's really interesting. And like Pump, like they pioneered that, right? And that is like real. Now, as we're seeing through these wars with Radium and Jupiter, like that's not a moat, right? Like anybody can, and I think you increasingly see this. And I think this is one of the issues with Radium as well, is like infrastructure in crypto is not a moat. And like in an open source world, whatever infrastructure you have is going to get forked one way or another. And if it's not open source, like people are just not going to use it because they don't know the risks that are involved. And so in an increasingly open source world, infrastructure is not a moat, right? So the ability to launch a token is not a moat. The ability to even like, people say like liquidity is a moat. Like, yes, in a sense, liquidity is a moat, right? You want to be on the most liquid DEX, but like liquidity is like mercenary, right? Man, that shit moves, right? Like I'm not building a house on a foundation like that, right? And so then what is the moat, right? The moat's distribution, right? Like obviously I'm going to say this is like a go-to-market guy, but like the real moat is distribution, right? If you own the end user relationship, that is what's most powerful. That's why Phantom has staying power. They can say, you to the Solana Foundation, we're going to use Hyperliquid instead of your protocols, and we don't care, right? Because we own the user relationship. We have a great wallet. That's why I think wallets are some of the best businesses in crypto, even still. And I think there's still a lot to be done there. But I think Pump Fund realized that it's just the ability to launch token is not enough. Just having liquidity for people to get to the bond the tokens is not enough. We need further distribution. And I think that's where the streaming thing becomes really interesting, because streaming is pretty, I don't think it's going anywhere anytime soon. Like I think it's up only for a long time, just like the amount of total streamable content at any given time. And if you have the ability to, I guess like not commoditize, but like financialize streaming in a better way, and you can create a better business model for streamers, I think like water flows to where it's easiest, like liquidity and the same thing. And so if you become the easiest way to make money while streaming because you have a token tied to your stream or something like that, that's interesting. I think the biggest issue with meme coins is that you need rules at casino, right? Like you don't walk into a fucking MGM Grand and it's like a free-for-all and you just throw your money and people are playing dice on the floor, right? There's rules to the casino, right? Everyone needs to understand what the rules are. Everyone needs to be playing fair. I think the days that, and I think you saw that, right? It's like originally like, when Pump Fund first came out, someone launches a token, it's super bundled, and like it goes to the moon, right? And then like people get wrecked, and now retail got smarter. They got wrecked, and they're like, this isn't fair. The odds are stacked against me. I'm going to go to a more fair game, right? And so I think casinos that have rules, and I think this is Pump Fund's attempt to create rules and structure around the meme coin game, where it's like, oh yeah, you can like launch a meme coin whatever you want, but like that doesn't make any sense. Create a meme coin for your content, right? Okay, like I don't know. I'm kind of into the whole like base like content coin thing. Like I think it's not enough structure, but it's at least some kind of frame of reference for people, right? It's not, because one of the really hard parts about meme coins is not only are they like, 1 out of 100 games, right? Like you're going to like one meme coin out of 100 might win, right? At any given time. But even within a single meme coin, if you pick the right meme, but you don't pick the right token, because there's 7 different Trump tokens, right? That get launched at any given time, or like any new meme. If there's 7 different ones, then your odds are cut again, right? So not only is it like a moonshot to get it, but then you're like a 1 out of 7 chance of getting even that 1 out of 100. Like, that's not, those rules don't make sense for the game, right? And so if people provided more structure around this, which is why I think like what is Polymarket, right? Polymarket is just like an event, which is like a piece of content. And then you have a coin around that, basically, right? Or you have a market around that, right? And then you're playing against the market for this specific event, right? Kind of the same concept, right? You're just like betting on, is this thing going to go up or down? And so I think that's why I think prediction markets are interesting, because it creates rules around the game. Sports betting creates rules around the game. And I think meme coins need those rules around the game to make the game fun, or else, because people are already done with like, oh, you're just going to launch like a super bundle thing. Those days are gone, right? You don't see $100 million runners anymore. Even on like the craziest events where you're like, there has to be something. Why? Is there no longer $100 million runners on things that obviously should have them because they're cultural events? Because there's 50 of them, right? So how are you going to pick which one's right? So I think all in all, like I think Pump Fund is realizing that the game needs rules, and they're trying to build rules or trying to add different utilities to the game to make the game more viable for the average person.
This episode is brought to you by MANTLE, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, MANTLE is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi.
Yeah, I actually agree with a lot of that, and kind of have the same sentiment and takeaway with the tokenization of content. Like, I know it's going to be a thing. I just don't think we've cracked it or figured it out yet, or we don't have quite the right form factor yet there. But I want to get back to a little bit of something we were talking about earlier with the verticalization of all these protocols. So you mentioned Jupiter, Pump, Radium. Something so that we're seeing them do is these like M&As. There's been a flurry of M&A activity in crypto. We're seeing Coinbase do it. We're seeing Stripe do it with the Bridge acquisition. I think Privy just got bought. Was that Stripe again that bought Privy as well? Yeah. So what are your thoughts on this? We talked a little bit about this offline as well. Where do you see this going long term?
Yeah. Overall, it's just like a consolidation of the industry, right? Like you have like 15 people who are trying to solve 8 problems. And what's going to happen is like some are going to win, some are going to lose, and then the big guys are going to come in and buy. I think people have massively underrated and continue to, which is why I think the market has been so suppressed for so long, is the impact of a positive regulatory regime, right? Like it's fucking free. It's free Friday. Like, anyone can do anything now, right? You want to launch, you want to buy an equity company to go issue shares to buy tokens, you can do that. Free game, right? You don't have the SEC breathing down your neck. You want like the President of the United States is launching meme coins, and his family is like building stable coins and like launching wallets and stuff. Like it is total fair game. And I think that's so great for the industry, because you need you need medium level outcomes, right? Or like, and crypto has already been really good about medium level outcomes because, you can get to market so quickly with a token rather than IPO equity, which takes 10 years, that you can like launch a token in 6 months to a year and you can get like, you don't need to make $100 million. You can make $10 million or $5 million or something like that, right? And you can get these liquidity events early. But I think one of the things that happened out of that is it kind of hollowed out the middle of the market where there are very few protocols. Like, if you look on like CoinGecko or something, you'll go from like 1 billion to like, 10 million in like 3 pages, 4 pages, right? And that's not sustainable. You need like a really, really strong middle of the market. And I think acquisition opens that up where, you have like Coinbase and Kraken who have been sitting on this cash for so long and they have no idea what to do with it and they couldn't do anything proper with it, right? And now they can, it's just total fair game. They want to go buy, I think the Opine acquisition by Coinbase is like super, super underrated. Like Coinbase is going to dominate the derivative game. And they're going to come out with an options protocol or like an options exchange or something that's going to like take so much market share back from everybody. So like, I think Coinbase super bullish, right? I'm surprised we haven't seen more acquisitions out of Binance.
Coinbase also bought Deribit? Okay.
Bought Deribit, they bought Opine. So they're like looking at sexes plus dexes when it comes to options, which is blows my mind that we haven't been able to figure that out yet. I mean, there's a lot of reasons why, but I think that's a massive, massive market. I mean, you're talking about like people that love leverage, like who loves leverage more than options traders, right? Like, but I think the consolidation of the market is just really, really healthy, right? Like you don't need, 100 different wallets. You don't need, 1,000 different protocols. Like you just don't need this stuff. And I think what this is going to lead to is like this consolidation in the space is I kind of call this like the hyper liquidification of like the L1, L2 landscape, where I think what's going to start to happen is, what Hyperliquid showed is that building the chain is not enough, right? You need to build the chain, like historically, right? Like last cycle, L1s, L2s were like, we're going to build the chain and people are going to come and we're going to go give out a shit ton of money and give out all these token incentives and grants. And we're going to get people to build stuff. And then it's just like copy pasta, perp dex, borrow lend protocol, like, the same 4 or 5 protocols everywhere. And now I think what's going to happen is L1s and L2s are going to start getting forced when Hyperliquid is forcing them to do that, is you have to have the core canonical protocol yourself, right? Like you need to have the core engine that drives demand for block space, you by yourself, right? And then once you do that and you're able to do that 2 or 3 different times, then other people will come and they want to build alongside you because they'll see composition opportunities. They'll see that you have a vibrant ecosystem, you have users, you have distribution. Okay. And so the acquisition for a team is going to be lower. But how are they going to do that? It's either like 1, they're going to build protocols themselves, or 2, they're going to acquire companies. So I think you're going to start to see a world where L1s and L2s are going to take these massive treasuries that they have and they're going to start acquiring protocols, right? So like, oh, we need a perp dex on our platform. Instead of like speccing it out and giving a grant and having someone build it and all of that, it's like, that. We're just going to buy this protocol and then we're going to have the team respec it internally. And then we're going to hire 3 people that are part of the foundation and the foundation's going to run it, right? And then they're going to do that across the perp dex. And so I think in this world, I think over the next few years, we're going to see like specialized EVMs. Like I think the world of the general chain is dead. I think you're going to see like specialized stuff. I think when you start to see specialized stuff, teams are going to be much more likely to go through acquisition for the things that just the chain needs, right? Chain needs a DEX. You can't have a chain without a DEX, right? A chain is going to need a perp DEX. A chain is going to need a borrow lend protocol, etc. But none of those are going to come. They might acquire and build those and like maintain those themselves, but you're going to need some kind of core specific infrastructure, just like how Hyperliquid has Hypercore. Every chain is going to need that. And if you don't have that, you're just DOA.
One theme that we've seen with tokens is this focus on revenue. And I think it's a sign of the industry growing up. It's a sign of investors demanding that protocols aren't just these hyper speculative plays. And I think what goes along with that, with the industry growing up, is that we have these more reliable, accountable, call them boring types of businesses. Not to call what Scribe does boring at all, but you working, in having started a creative agency, call it a crypto marketing agency. What are your thoughts there? Like, I guess, like, what does the industry need to continue to grow up and mature and be able to hire good people and have this industry taken more seriously?
Yeah. Great question. I think there's just a ton of room for more quality businesses, both traditional and like crypto native businesses, right? So like, Scribe, for example, it's like, we're like a pretty traditional business. We take tokens and things like that, but overall, like we're just a pretty like simple agency style business, like, and I think more people need to just look at how can we take traditional business models and not necessarily like, oh, let's throw a token in there and let's go take it to the moon. Like, let's just service the crypto industry better, right? I think you guys do a really great job with that with media. I think there's a ton of room in media for just like a lot of different forms of media, right? You're seeing streamers. I think streaming is really interesting. You're seeing like, I'm surprised I don't see more like people streaming while trading. Like, I think you see that in like Korea and some other countries, but I'm surprised that's not more of like a staple, or even like a podcast while trading and things like that. There's media. There's like traditional service businesses, right? Like, I think you need more like accountants, right? And in crypto and just like regular service providers. And I think there's like just a ton of different problems that projects face where they're like, man, I wish I had somebody to do that, right? I think like, I've seen people that are like, hey, I'm super crypto native. My buddy is just a really, really great producer, right? He just produces incredible video content, right? And he shoots it and he makes it. I think like there's not just us as an agency. I think there's not enough people that do like high quality ad creative, right? Like, I'm going to shoot a really cool video for you. I think like Sol Jakey has done a lot of this kind of stuff and he's kind of pioneered it a little bit. I think there's a ton of opportunity to build like an ad creative and like a production company for crypto companies. That's like, we're crypto native. We get you. And so we're going to service you better than a traditional incumbent, right? And like someone who does this in Web 2. And we get it. We'll take tokens and we're fans of the protocol and we'll use the protocol and things like that. I think like, maybe newsletters are a little overplayed, but I think there's derivatives of content in the similar way that are super viable, right? And I think like you see this with like, I don't know, paid groups. I mean, like not a super big fan of it, but I think there's a lot of interesting stuff that happens in some of them. But I think like crypto overall, I think there has been a lackluster amount of quality traditional businesses that have serviced the crypto space. Because overall, and I think I talked to a lot of my recruiting friends and a lot of like my friends that are recruiters in crypto, and they talk about this a lot as well. It's like there's a problem with a talent pool in crypto. And I think this goes back to what I said at the very beginning, where crypto attracts a certain type of person, right? Someone who's more risk on. I think I think that also tends to like people tend to be a little more ADD in crypto than in other industries, right? Because people are like, fuck, where's the 10x going, right? And I think that, either people that are watching this right now need to start thinking about what problems that they can solve for companies in crypto. And you don't have to do it yourself, right? Like if you're the crypto native, you can partner with a friend of yours who is like a really great traditional Web 2 guy that does something very specific, right? Like maybe it's, shooting content, maybe it's writing content. And then you bring the crypto piece and he brings this like traditional structure and understanding of like how to run a quality operation. And then you combine that. And I think there's just so much space for more businesses in crypto. I think everybody tends to think like, oh man, how am I going to launch like the next DeFi protocol or the next DEX or like the next DEX aggregator? And it's like, a lot of that stuff is like kind of like done. Like, like there's only so much, like once like Uniswap V4 came out, it's like, okay, there's only so much more innovation that's going to happen on the DEX side, right? But where is there room for building? And I think this leads into like the M&A and the acquisition side. Is like, especially as the crypto industry grows, there's going to be a ton more of also along with protocol M&A, there's going to be traditional M&A, right? Where you're going to have these big PE firms come in and they're going to be like, we need exposure to crypto. We need, and we're an agency roll up and we're going to come in and buy agencies in crypto that do specific things and roll them up and create a bigger company. Or, and so I think there's just a massive opportunity for people to just like build more cool businesses. It doesn't have to be the next $10 billion protocol. You can build a really, really great business that does 5 million ARR, 7 million ARR, 10 million ARR, and you can do really, really well for yourself by just solving a problem for the crypto industry specifically. And we run into a ton of teams that are like, man, I need a better accountant. I need better content guys. I need better, PR people and all this kind of stuff, right? And so I think there's a huge opportunity to like take things that are traditionally done for, startups in Web 2 and just add the crypto nativeness and partner with people that maybe have done it really well in Web 2 and just boom, spin up that business in Web 3.
Yeah, I love that. You actually just jogged my memory about something I saw last week. So there's like a publicly listed media company. I think it's trading at like $60 million. Just came out and said they want to buy up a ton of crypto like media podcasts. And, myself being part of a crypto podcast, like, well, that's very interesting. But you can clearly see what they're thinking, right? They're like, okay, the pie of crypto is expanding rapidly. And this is one way to sort of control the mind share of that pie, right? So, yeah, super interesting.
I want to double click right there on that point, because I think one thing people don't realize is, and I think this is why there's going to be like a 10x in crypto media. Like there's going to be so much more crypto media that comes out. And the reason is because the crypto audience is objectively the most valuable audience in the world, right? Because you're talking about 18 to 40, majority, about 90% male, financially focused, breadwinners in their households typically, and, highly financialized. They like to gamble and things like that. So like, why do you see these like casino companies that are all just kind of focused on the crypto? Why do you see stake get so big? And, I'll plug the Block Asset guys. I love those guys. Block Bet, they're doing super, super well. And it's because the value of the audience of crypto is just so much more than a traditional audience. And I think that audience, and the reason why they're doing these types of things, is because not only are they able to then offer this demographic to crypto companies who historically, and I can tell you this as a fact, pay way over market value on CAC. Like the amount that crypto pays in CAC versus traditional Web 2 is like multiples and multiples, like at 5, 10, 15, 20 times what is normal in Web 2 for CAC versus what is valuable in Web 3 CAC. Like they will pay a shit ton more. But also, it's objectively valuable to non-crypto audiences as well, right? If you're like AG1, you're like Lululemon and Fabletics and like, I don't know, like any brand like that, protein bars, all these fucking things, like they want to get in front of this demographic. You're 18 to 40, you're male, and you have money to spend. Like what better demographic is there than that? So I think it's going to continue to happen. That's why I think there's so much opportunity in content, media, all that stuff.
Hey folks, I want to tell you about our sponsor, GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to gearbox.fi. Rumple Labs is revolutionizing DeFi. Rumple lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using Rumple to unlock instant liquidity and maximize their yields. So join Rumple today and start spinning your points into gold. Learn more at rumple.xyz. Say hello to Puffer Unify. Puffer Finance is expanding beyond native liquid restaking with new products such as Unify-based rollup and Unify Pre-Confirmations AVS. Unify is not just another L2. Unify is a based rollup, one that will solve L2 issues, such as slow withdrawals versus instant withdrawals with Puffer Unify. Puffer Unify is fast, capable of sub-second transactions. Unify also has boosted Puffer points, which means if you bridge assets, you earn boosted Puffer points and rewards from dApps on Unify. Puffer's core products mean a bright future for Ethereum. Learn more at puffer.fi. Ishan, with all the positives like we've talked about in terms of like the opportunity to work in the space or just like how much growth is ahead, I mean, one thing we haven't discussed is from 2021, there's been this talk of like retail has never come back, that it's never gotten quite as big. A lot of people, whoever would have lost money on, let's say, NFTs or just tokens in general, since like Terra Luna collapsing and FTX and all the other like blow ups. So I still get the sense too that like we haven't seen like retail really return to the space. And I am wondering like what's going to trigger them, because we do have institutions here now. So like the amount of money that's coming into the space, I would argue there's more money coming into the space. It's just not as much of like a mania that like your friends and neighbors are aware of. But like if you look at, for example, the digital asset treasury stocks, stuff like SBET or Bitmine went like parabolic when Tom Lee announced on CNBC that, that he was becoming chairman. So like there's signs of like new excitement, new money coming in, but yeah, there's something still missing. So I don't know if you have any thesis on that.
Yeah, but the one thing that comes to mind for this is I don't think Bitcoin gets a blow off top. I think the number bias is too high, right? So historically what has happened is like, people buy a bunch of Bitcoin goes parabolic, then all the alts come with it, and then alts go twice as parabolic. And the problem that I think is today is like retail isn't going to top. Who's the top last, right? We're at 120 right now. And like, yeah, granted, I'm saying this after like, we've seen like a $10,000 move in like the past week or something. But like, in 2021, like, like at scale terms, like, dude, we should be way, way higher, right? If we're getting like, we've been sitting at this 100 range, like from like 95 to 120 for like what, like 3 months now, 4 months now. And we're theoretically in a bull market, but I think, that retail participation has come from top blasting Bitcoin, right? Like how many stories do you have of friends that are coming to you? They're like, oh yeah, I bought Bitcoin in 2017 and it went up so much and I wrote it all the way down, right? And I don't think that bid is going to happen in the future because people just get freaked out by the 100K number. They're like, dude, I'm never going to own a Bitcoin. And so then they start going to like XRP and things like that. But if Bitcoin doesn't run, then other things aren't going to run nearly as much. And so I think it's like I don't know. I don't think institutions are going to top blast, right? Like they're going to be much more judicious than that. They're not just going to be like degens that are like, like 10x leverage, let's go. And so that's my big concern about the market is I think the days of like these insane cycles are kind of done. There's just too much dispersion. Capital can just go in way too many places, right? It's like going into equities and you buy coin. Like, how many people do you know that own a shit ton of coin and hood, right? That historically would have owned ETH and like long tail ETH alts, right? And so there's so much dispersion in the space. And the number bias of Bitcoin is so high that until we start, and you saw this with the NASDAQ, like they started denominating in like the 0.12 million. I think what you need to see is I want to make like a big push to start getting everybody to denominate in sats, right? And so if you start to get like sat denomination, okay, well that's like, you can get retail to blow off the top. You're like, I have 100 sats, I have 1,000 sats. That's where you can get it. But I think number bias is real. And I think because of that, it's going to kind of depress the market. That plus dispersion, like we're not going to get this crazy. Like I think people who are like, oh, we're going to get 250K by like, end of year, next year, something like that. I think that's crazy. Like I'll book all those bets. Anybody want them, I'll book them.
Yeah, I was paying attention to like where did Bitcoin perform from market bottom to market top in past cycles? Where did it go from previous market high to new market high? There's all sorts of ways to like think about this. And each cycle, the volatility is that much less. So like, we talk about the returns being muted and just, that means for anyone not following that, it means that like the multiples that you see in terms of like Bitcoin or Ether or Sol going up, they diminish over time. And again, it makes sense, like bigger market caps, it takes a lot more money to push the price up. And yeah, I've thought the same thing the whole time, Ishan, with Bitcoin. Like once it hits 100,000, how much higher, does it go in a cycle? But I do have this like lingering thought that like we always underestimate like the greed that kicks in and just like the FOMO that kicks in with each cycle. And I'll say I personally could see Bitcoin still going to like 250,000, 300 plus thousand this cycle. It's nice to see Ether like on its way, but like, I mean, Ether needs to hit a new high. Ether hitting a new high is good for all other tokens. The second largest crypto asset going up and hitting new highs allows for others to start to speculate on what their token could do. And that's been something that's been missing from this cycle. And I think it's absolutely held back the space, from seeing higher highs. Without, calling out, of course, like there's been like the newest sort of Cinderella story in crypto, which is hyperliquid. And I think Solana clearly had an amazing run this cycle, but I bet Sol could go to a new high if ETH goes to a new high here. Like, I don't know why the bulls fight each other. I'm like, guys, like we're all going to win together if the price is going up. The one token, though, that can just continue to go higher at times without seeing all the other tokens benefit, or at least it seems that way this cycle, was Bitcoin. Bitcoin seemed to just be able to like be off on its own. And the days of seeing like a rising tide lifts all boats for all tokens, like that happened in prior cycles. But to your point, there's too many opportunities available. There's too many tokens. We went from a few hundred, a few thousand tokens to now there's literally tens of millions. Thanks, Pump, for ruining the party there.
I'll take a quick crack at just being a real bull here still. So like, where's the bid going to come from? You've got Michael Saylor now, who was, I couldn't believe we had a Michael Saylor last cycle. Now look what he's transformed into, and look what he's grown. He's grown like a whole army of mini sailors. And then not only that, he's now like an advisor / I'll call him a KOL to Pakistan. I saw he's like advising their Bitcoin strategy. So what does that mean? We've got sovereigns buying now. And like, that's who's going to be top blasting now, in my opinion. And then something I'll call it from last cycle, I feel like, yeah, that cycle was a bit muted. And it was in part due to the liquidity cycle drying up. Like, you can point to May 2021 is when we peaked for liquidity. I was listening to a really good podcast the other day with Raoul Pal and Julian Biddle. They've basically mapped out, like, they see strong up and to the right liquidity until Q2 of 2026. Like, if you strip what Bitcoin is down to its foundational principles, it's an asset that reacts to liquidity. And I think we're, again, in the beginning of this credit cycle, big, beautiful bill. They're going to grow their way out of it. And what is going to be the most reactive asset probably on Earth to those, conditions? I think it's going to be Bitcoin. And I think we haven't even really begun to see who this top blast person is going to be, or nation like type actor. So there's some Bitcoin bull hopium. I think we're going incredibly higher, personally.
And we covered a bit of this earlier, like the amount of money going into these treasury stocks. Like, I mean, these teams are acting very quickly. And like, again, full disclosure, like, we're long SBET. SharpLink bought like 65,000 ETH today, or they announced that they had. So they now own like something like 280,000 ETH, and I think that's like $850 million of ETH. Like, these are enormous purchases. That 64,000 ETH represents 4 times the amount of ETH that was the net issuance on Ethereum over the past week. So Bitcoin has been benefiting from this for quite a long time now with MicroStrategy, and all the way up from 15,000 to 100,000. I personally just was like shocked at like the amount of money that Saylor would continue to raise. Like, he never let off the gas. He just kept raising money and buying more Bitcoin. And so that playbook is there, and we have a market that understands that playbook. It doesn't look ridiculous anymore. I think many of us were like, I feel like Saylor is just top blasting and he's going to get wrecked eventually. And again, like, it's normal. The market has to correct at some point, but the market is very happy to see these digital asset treasury plays. And so now you have competitors in the space. And there's been this explosion of like 4 to 5 major ones in ETH. There's been a number of them in Hype. We're tracking HyperEVM. We had them on the podcast for like a short discussion. And it's just wild. The amount of money that's pouring into the public markets that's then being used to buy more of the underlying asset. And then on top of it, the thing that's different from MicroStrategy is they're not only just buying up, let's say like ETH, but like they're staking it. And then there's intent to do more with it in DeFi. Like, I'm not, expecting them to do like a 10x loop, I'm expecting them to do simple things like maybe lend the liquid staked version of Ether on something like Aave and then borrow against it, which credit to BTCS, I'm hopefully getting the name right. They just announced that they had actually put up some ETH into Aave and borrowed against it. So investors in the public market can get exposure to these digital asset treasuries and not only have this like levered volatile exposure to a crypto asset like ETH, but they can also get exposure to DeFi yield. So all of this feels like a recipe for like a whole new sort of mania. And the mania is already playing out in terms of like price movement. I have friends who are asking me now about these different plays. Like they're like, I'm noticing this thing is up like 20% each day for 5 days in a row. And you're like, yeah, and here's why it makes sense, you know, for XYZ play. So, yeah, I'm extremely bullish. I want to be crystal clear. Like I'm on board for $20,000 to $30,000 ETH this cycle. I'm on board for $350,000 Bitcoin. Like I think we have underestimated like the moment that we're living through. So like enjoy it. I guess if we're wrong, like just sit longer. You know, I've got time. I'll wait years and years. So
this is the ultimate bull case, right? The ultimate bull case was always nation states buying Bitcoin, putting it in the reserve. Like if that starts to happen and that starts to propagate throughout, and it's like you have like everyone doing the El Salvador, yeah, okay, like all bets are off, right? We're going to then we're going to sailors like 13 million or whatever, right? And like, you know, and I think the same thing with ETH is like, oh man, if this is like the corporate treasury asset because it's productive and it's efficient and like, you know, it's safe and you can use it throughout DeFi, like you can run complex treasury strategies, right? As like a company, right? Where it's like, oh, if I'm Tesla, I'm saving my money in Bitcoin and then I'm using ETH and I'm holding ETH and I'm like, you know, using Aave and all that. Like those are definitely like the absolute bull cases. And if those happens, yeah, like all bets are off, right? Like Bitcoin, I think 250 is flood at that point, right? Like, you know, we're going crazy, right? I guess I'm just, I think we're maybe, and I definitely concede that you're seeing the first inning of that. On like, okay, devil's advocate is like, what happens is like, they start to do this. Everybody gets levered up. You know, we have some kind of black swan. Everything gets drawn down. Everything unravels, everything liquidates, and then Bitcoin is back to like, I don't think it'll get back to like 30, but it's like, you know, maybe Bitcoin's back to 50 because, you know, Saylor has to start selling and he's like forced to sell, or like MicroStrategy stock goes to zero and all you have is Bitcoin, so it starts trading at a discount to NAV. And then like, you know, ETH is like, you know, black swan goes down, all these treasury companies go down, and like now we're in like another prolonged bear market because once again, like every cycle in crypto, everybody get a little too crazy on leverage, right? So I can see both sides. I'm not betting on one. I'm not betting on the other. I'm like staying pretty measured in the middle, but I can see both happening, like totally realistically. And so I think for now, I think like until we start to see this stuff shake out a little more, see what the ongoing demand is for these DATs. And then we start to see like, are nation states really interested in this stuff? Like, are they actually going to have it, you know, not as 1%, but like a significant portion of national reserves? So that's a whole different ballgame, man. That's the end game that we've dreamed about, right? That got us into the space.
So Ishan, I feel like we've done like the inverse podcast here, where, you know, this is probably something I should have asked you at the top of the show, but maybe like, can you tell us more about what you do at Scribe? Like, what is your day to day like? How many? I don't even know how many people work there. Like, yeah, just fill us in.
Yeah, I'm an open book with this stuff, guys. So yeah, like I'm one of the founders of Scribe. You know, one of the cool things kind of tying it back to the FTX thing is like, yeah, the FTX, you know, the thread happens and, you know, I went, I guess, a little viral on Twitter. And, you know, one of the cool things was like, you know, I was one of the only guys with like some liquid money from shorting, at that time in the market. And so I was pretty flush when the market went to zero. And like that kind of gave me the opportunity to like buy SOL at the bottom, which was really cool. And like one of probably a better trade than the FTT short. But I think what's even more valuable now, what's been way more rewarding, is it kind of gave us the lift off that we needed to get Scribe off the ground, right? So that it gave us a lot of the first clients, you know, the people that wanted to join us, a lot of the recognition in the industry. So again, like what is Scribe? Scribe, we're like I'd like to think we're the largest go-to-market agency in the space. I like to call us a creative content and communication studio, which is just a fancy way to say we do go-to-market for projects in the crypto space. We started with 3 people back in November of 22. Today we're probably, 60, 65 people, something like that. And one of the coolest parts about the gig is we just get to work so closely with so many different protocols in the space. And we get to just be so hands-on. It gives you this really unique experience because you get to see, you're almost like a core contributor at 3 to 5 to, I get to touch a lot of the projects. So upwards of 30 different projects at any given point. And I get to see okay, what's happening? What are they working on? What are they thinking about? They share the most intimate things with us about what they're thinking about, their roadmaps, stuff like that. And it's so rewarding to get to work with super smart people on our Scribe team, but also a lot of protocol teams in order to just help them grow, right? We talked about distribution is the moat, and we want to help build distribution. And so how do we do that? Well, we do a lot of creative work. I think people in the space talk about narrative a lot. What is narrative? In Web 2, what people call narrative in Web 3 is brand, right? You have a brand, you have a brand strategy, you have a brand story. You have a frame in which people think about you and can associate with your project, your mission, your vision, your values. And so we spend a lot of time working with teams, I'm sure you guys can surmise, not many teams are great about being able to tell their story really well. And so we do a lot of the creative, we do the visual design, all that kind of stuff. And we really help teams just understand what their brand strategy is, right? And then, we do a lot of the execution too. We do a ton of content in long form, short form, all that. And then we also do a ton of communications, right? Media relations, getting people into CoinDesk, Cointelegraph, CNBC, and Fox Business. And there's a ton of appetite for crypto stuff over there. When we first started, we were doing a ton of different things. And we realized that, consolidation is a really good way to go. And so we consolidated a lot. But yeah, it's a really fun time, man. Just getting to work so closely with so many different smart people, that it's one of the most rewarding things. The shorts and the trades and all that kind of stuff is cool. The Twitter content's cool. But the thing that's been most rewarding is just building and scaling a team, bootstrapped. And just when you watch people grow in their careers, one of the things that's been coolest for me in my career is, we work with a lot of the large protocols. When we started out, we worked with a lot of the early startups. And then obviously from a business perspective, it makes a lot more sense to work with a lot of the larger protocols. I can't name, there's some I can name names, there's some I can't. I don't know exactly which ones I can name. So I can just say there's probably a dozen or so just in the top 100 that we work with. We work with 30 to 40 teams at any given time. But I think the most interesting part is just building a team and watching people grow. We like to think of Scribe as a CMO factory, right? We want to build the next generation of CMOs for the industry, people that really get it from a fundamental perspective. And that's been the coolest part, is watching people kind of graduate from Scribe and go be CMO at this big startup that raised $20 million and go be the head of brand at this place and, CMO at this place. And that's honestly the coolest part is I think we talk about the protocols, we talk about the infrastructure a lot. I don't think people spend enough time in crypto talking about the people. I think you guys do a really great job of that by telling the stories about the people and the protocols and the people that build them. And I think that's just one of the cool parts is building a big team, watching people grow, watching it scale, solving hard problems in the industry, helping the industry move forward. And, a couple shekels here, there doesn't hurt.
True story. Ishan, you got us our first sponsor on the podcast in 2023, which was Gains Network or G-Trade. So we were so grateful for that. And it's nuts though, how much you guys have grown. We would do these check-ins, full disclosure, I am always excited to recommend founders or teams that I've invested in, Nomadic's invested in, to work with Scribe. And so, that's been great. But gosh, every time I would check in, it was I thought you guys only had 3 people working on the team, and now it's 10, and now it's, and then, yeah, it's nuts because now there's 60, 70 of you. So talk about a professional business, call it a boring business. I don't think the product is boring, but it's really hard work. It's difficult what you guys do. And clearly I think the foundation of that is storytelling, and anybody listening to this interview can clearly tell that you are a great storyteller. So just keep up the great work. And we really enjoyed having you here. I think this is a good place for us probably to wrap up, guys. So I want to remind our listeners that first, you should learn more about Scribe by going to Scribe. It's SCRIB, the number 3.co. That's the website. And then the Twitter handle for Scribe is, you can follow them at scribe_co. Follow Ishan's account at Ishan B, the letter B as in boy, 22. And then we'll put that into the show notes so you can easily find them. And then Ishan, thank you so much for spending all this time with us today. Like, what a great conversation in terms of getting to talk about our bullish theses for the market. But I really enjoyed like what you had to share on like the M&A side. Like, that's really interesting. Haven't had anybody really talk to me about that. Just kind of like realizing there's a lot going on from like a business standpoint. You know, I think about these protocols and DeFi as businesses. You know, we've been tracking the whole like revenue meta. That's exciting to see, but I was pretty blind to like all that you talked about in terms of the verticalization on Solana. So very interested to track that as a Solana DeFi user too. But any final word for us before you go?
Yeah, this was awesome. I mean, again, like long time listener, first time caller. So it's awesome. And it's been awesome to watch you guys grow. We've kind of grown alongside each other, and, we get an awesome chance to work together on a lot of different occasions. So it's always awesome getting a chance to chat with you guys. I have one hot take that I've been kind of rolling in for a little bit that I want to leave with people. I think you guys are going to enjoy this as ETH Maxis. I think Solana has a ETH type of run over the past 3 or 4 years. I think what NFTs did to ETH, where you got this crazy blow off top and all of this excitement, and then you got a kind of depressed period for 3 to 4 years, 4 years now. I think you're going to get something similar with Solana, where, I'm a massive holder of Sol, have been since basically the bottom of FTX. And even with that, I think that there's going to be this drawn out period where you had the president launching meme coins on Solana, and like, how much toppier can you get than that? I don't think there's the president of the United States, right? And I think, it's much more than like Ashton Kutcher launching like Stoner Cats or something like that, right? And so I think you're going to get an ETH style consolidation period for Solana over the next couple of years, in terms of price at least. So that's a little bit of my spicy take, is I think we see an ETH style 3 or 4 year consolidation period out of Solana in this like 100 to 250 range, similar to how we saw with ETH for a while.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.